Welcome to the BIG5D Podcast, bringing you focused conversations with technology thought leaders in Africa and the Middle East. This episode of the BIG5D Podcast is brought to you by Fractional.dev. Fractional connects developers and organizations with each other for short to medium-term projects. You can find them at fractional, with a K, .dev. Hello, everyone. Welcome to the BIG5D Podcast. I'm Charles Laughlin, co-founder of BigFive Digital. Tripped over that a little bit, sorry. I'm here with Houssam Kayal, who is the CRO of Foo, which is a fintech company based in Dubai, originally founded in Lebanon. Welcome.
Very nice to be with you. Thank you for the opportunity.
It's great to have you here today. So why don't we start with the basics? Who are you, and where, what's your background? What led you to your current role? That sort of thing.
So basically, I'm an engineer by education. So I'm an electrical engineer, communication engineer, and the bulk of 50% of my career life was in multinational. Worked with Hewlett Packard, and then I basically moved to set up Cisco in Saudi back in 1997 when there was no internet. So I'm very, very driven, very passionate about transformation, starting up things, driving things to the next level. That's what makes it tick. So it was a great journey in Saudi and with Cisco. I spent a few years in Saudi, and then I moved to different roles with them. But it was exciting to see how the transformation of the country, how do we, internet disrupted a lot of things back then. And then I evolved into different roles related to startups. I did my own startups in different areas. And then,
could I pause there? Could you tell us about one of your startups? Just pick one.
Sure. I did something called Cook and Eat, which basically is a platform where people can share recipes. It's kind of like it's a
okay. Sounds great.
Curated content where people, because food is a great way to connect and socialize. So, and then internet is a platform where people connect, and food is one area that and it's an international language, so people want to learn about cultures through food. So it was an interesting experience, setting it up and how you actually deliver content. How do you what kind of content people would like to use, consume. How do you actually get a housewife to be able to actually upload a video, shoot a video in the context of the region, Middle East.
So it was a user-generated platform.
A lot of it is user-generated. We did some professional content just to drive the consumption, but it was interesting. So this is one startup I did. But then I moved back into career life, and I was hired by STC, Saudi Telecom, to actually set up their first. And this was my first transformation into financial services. I kind of moved from telco in technology into financial services because I was mandated to help them with diversification. And telcos at that time were looking at how they can leverage their assets. And assets for telcos is not only their infrastructure, but their user base. And STC was the largest telco there in Saudi Arabia, and they had around 14 million active subscribers. So one of the things that you could look at, this was in 2016, I came up with the idea of them moving into financial services and setting up a payment platform like a wallet that can transform them to become an enabler to that. So this is my transformation.
So this is about 8 years ago. Yes. You're talking to a telecom about entering financial services. At that time, how was that conversation received by the telecom? Was it considered revolutionary at that time? How was it taken?
So I was hired into STC. So I was an employee. I was basically reporting to the board, and I kind of pitched that to them. They were very open to non-telco ideas, so that was critical. I think from the telco side, it was fine, especially the way STC and telcos work. They actually hire consultants, so I've managed to be able to get the likes of Kearney, AT Kearney at then to kind of build the use case, show them that how they can monetize from that. But the challenging part is actually how you take that concept to the financial regulator, because the central bank, who are not used to non-banks operating in the banking industry.
And that conflict has been repeated over and over again across many different countries, right?
Of course, but central banks and regulators, And this is, I think, where they see the revolution and the evolution in the financial sector globally. Have realized that they have to open it up to others to actually participate, as long as they basically play by the rules of the of the regulator,
Hmm.
get a
Hmm.
license, get regulated, be perceived as following the rules when it comes to KYC, know your customer and so on. And as long as you play in that
Right,
context,
right, right.
you're not a bank, but you're providing some element of the banking service and monetizing from that.
Okay. So is Foo, you explained to me what Foo is, but my perception is that it's there to facilitate this sort of transformation for companies that are not financial
Sure,
companies to become financial companies, at least at some level or in some
sure.
way. So talk about what Foo is and what it does, if that was a good
No,
entry
absolutely,
point to
absolutely. I
that.
think it's a very valid thing. So Foo, basically Foo underscore, it was founded by two geeks, two developers, and Foo underscore
Let's hope so.
stands
Yeah.
for a variable X in the programming language. So a lot of people say, what does Foo stand for?
Okay.
They started back in 2009 as kind of like a digital transformation company that developed websites and digital apps to help the transformation and the delivery of the user experience and so on. But very quickly they
Hmm.
moved into focusing on financial service in 2015, 2016, where they built very solid, where we built very customized financial services, like for example the national wallet for Bahrain, Benefit Pay, which
Hmm.
is now the de facto payment vehicle. It's even, it's much wider used than any of the other banks in Bahrain. So we've kind of like built different customized solution, looking at our expertise when it comes to development, in-house, and building customized wallet and financial services. And then what we
Hmm.
did is we moved very quickly to leveraging the fact that we've realized very quickly that a lot of these projects and programs can be reused. So we started to build our portfolio of financial products, wallets, white label wallets, card issuance,
Okay.
merchant platforms, digital onboarding. So these are modules that you can actually plug and play and to deliver an end to a use case, a solution, like a consumer lending solution and so on.
And are most of your partners, customers, whatever term you use, organizations like these telecoms you were just talking about that have customers but are not financial companies sort of initially, but they can add that. So you help them add that to their
Yeah,
portfolio.
basically they can use our technology instead of building that in-house. So they
Right,
so they
of
can
course.
go
That is why you partner
yeah,
with a
so they can
fintech,
go
right?
to
Yeah.
market fairly quickly. And it's not only telcos.
Okay.
It could be fintechs. It could be even
Mhm.
banks. Some of our larger customers are
Okay.
banks.
So describe how you partner with a bank.
So basically, banks are being driven by the fact that others are coming to their tariff, to their basically areas and trying to take business away from them. They're trying to differentiate themselves. So they try to
Hmm.
find ways where they can deliver services differently. So
Hmm.
traditionally, banks would you can only bank physically at the bank, which is bank 1.0, right? And then you put an
Right.
ATM machine, you can bank, you can extend that service. Then the internet came in, and then basically what happened is, you can actually get all services from the bank online, right? Either on a web
Right.
browser or an app.
Who uses ATMs anymore?
Exactly. But what's
Yeah.
happening is they realize very quickly that it's not like one size fit all. So they had to come up with specialized products that can deliver specific services. For example, catering for blue collars who wants to only focus on remittance, international remittance. To what they want to,
Hmm.
especially in the Gulf, a lot of blue collars work and they want to send money back home. So these are not interested in
Right.
personal loan or home loan or car loan. So why
But they want good remittance rates, right?
Exactly. So they want a very
Hmm.
simplified, app that would basically get them onboarded very quickly, and then they'll be able to immediately check which country beneficiary, and then instantly send the money, right? So how you simplify the experience and make it deliver. You don't want a full loaded internet banking application for them to basically get onboarded on that.
Right. Right. Right.
So that's what we do. That's how we help them basically.
Okay. So is your solution set pretty unique to the region, or kind of talk about how applicable it is, say, to Africa, for example, or other emerging markets, or whatever, wherever you think your
Sure.
expansion path is,
No,
if
no.
it
I mean,
is.
you're very, very, very spot on. I think it works very well in developing markets. because this is where sometimes there's a shortage in the banking services, because of the physical size of a country, because of the way banks have structured or so on. So you have to find ways where you deliver an element of a financial service, whether it's payment, micro lending,
Okay.
and so on. And that's where we basically help these service providers, whether they're telcos or fintechs or entrepreneurs who wants to actually deliver a very niche solution in these markets. So they actually work with us to help them, take this with very little risk from a technology investment perspective. They don't have to build things from scratch.
Okay. So there's some terminology floating around, and I'm going to throw some of it out. And you talk about how your company is applying it, if at all, and kind of what do you think it means in the broader sense of, because we've just been talking about, helping, for example, my guest workers send remittances back home as one example. That's something that's talked about quite a bit. And other examples where there's, creating an opportunity to create microfinancial services for the unbanked, et cetera. I'm making these terms up as I go along. But so one term is embedded finance that's often used. Could you talk about that, kind of how you guys think about
Sure.
that? Is that part of
Absolutely.
your vision, et cetera? Kind of talk about that
Absolutely.
a little bit.
So embedded finance is where an entity like a retailer, like Carrefour, for example, like a supermarket, like who's not in the business of financial service. They're not interested to create a loan, but they want to enable an element of a financial transaction or service within the experience of what they actually deliver. A very good example is Carrefour, right? Where you basically where they have enabled a wallet, a closed loop wallet on their platform. So whenever you buy something from the supermarket and you want to return it, or we ordered online, part of it got not delivered, they'll refund the money back into the wallet real time. So in this case,
Right.
you don't need to actually worry about the money getting back into your credit card or debit card after 2 weeks. You can actually use that money instantly, right? So this is a very
Okay.
example of embedded finance. So it's a way where you take an element of a financial service and enable it within the context of that business, which is not financial service or banking.
Right. But they need some piece of it in their
Absolutely.
customer journey or whatever, wherever
100%.
it goes. Okay.
Ride hailing,
Okay.
for example, Uber, or or food delivery. When you order something, you can enable an element of, especially if you want to if you have loyalty points and you want to be able to use that somehow to transact. There are multiple ways where you can actually enable that element of in the experience.
Well, yeah, and ride-hailing apps, they have payments with the drivers, and instant payments and things like that. That's, I don't know if that's part of this,
Absolutely,
but that's certainly,
absolutely. You're
yeah.
you're
Okay.
spot on. So I mean, how you actually make sure that you
Mm-hmm.
cater for people who actually have cash on delivery, because in some
Mm-hmm.
markets, credit card is not, or cards are not very very common, right? Or wallets, right? So
Right.
they want to pay with their wallet, which is easier. As long as it's digital, it's easier. When it becomes cash, it
Right.
becomes very challenging, right? So you need to be able to cater for that.
It's also safer. Yeah, there's a safety element too, especially with drivers and things
100%.
like that. Um, let's move on to another phrase that's thrown around a lot, not exclusively in the region, but it's certainly banking as a service. I'm curious, the as a service, framing is always kind of, I have a colleague who writes about technology a lot, and it seems like everything is blank as a
It's true.
service. So what is
It's
banking
true.
as a service?
Correct. No, this is a very important context. So this is where, we talk about banking 1.0, when basically banks, you can only bank at the bank. And then 2.0 is
Right.
basically when you extend an ATM machine and you basically can bank after hours, but only very specific things like withdraw money. And then 3.0 is the internet banking, where you can actually do a lot of
Okay.
services. Banking 4.0 is banking as a service, which means the banks are realizing that they've invested a lot in their assets. So they have a core banking
Hmm.
solution, they have technology, they have a loan management solution, they have treasury, they have a card processing solution. They can issue credit cards and debit cards. They have KYC. They can actually enable the actual acquisition of customers, knowledge of customers, so they can fulfill the
Hmm.
requirement of the central banks. Now, if I what banking as a service is basically the banks realizing that they can actually monetize from these assets by offering that as a service. So if I'm basically a consumer lending fintech that I want to start a business, Instead of building infrastructure myself, I'll go to a bank and say, well, if you've got a loan management platform, I want to buy that service from you. So I will use your loan management service to originate the loan. I'm managing the customer acquisition. I'm doing everything. I'm using my
Okay.
app, and I'm going to pay you per loan. That's
It almost sounds like white label banking. Is it?
it is. I mean, this is how it is. But the thing is, banking as a
Okay.
service opens up the opportunity for banks not only to use their own assets, but to partner with others to enable other things like AI, artificial intelligence, big data. So once you enable this, because what it is, it's about creating this layer of integration. The complexity in this is how do you actually get others to integrate with these services seamlessly without really spending months or years to actually get that service out there. So you do once you enable this integration layer once. It's called microservices, but once you do that, you
Right.
enable other aspects like our non-bank assets partners who can come in, schemes, credit card providers, expense management, international remittance providers like Western Union or MoneyGram and so on to come in onto that platform and offer that as part of the service. So you become a reseller, not only positioning your own asset, but you can resell other services as part of that portfolio.
So, when we were talking about embedded finance, again, this is a non-expert perspective. When you're talking about embedded finance a moment ago, it almost sounded like banking could be sort of fragmented into where almost anyone can be a bank or part of a bank,
100%.
right? Banking as a service sounds like a huge opportunity for banks to extend their services, not necessarily with their brand, but with their underlying assets and technology, et cetera. Talk about who wins in these scenarios.
Everybody wins. So the bank would.
Well, of course.
The bank.
Who's the big winner?
No, I think it's the consumer, it's the end user. So the two end of the spectrum, the government, the regulator, because it means that everything that is going in that value chain of enabling that service is actually being monitored by. I mean, people don't like that, but it kind of from a controlling perspective, especially when it comes to money laundering and all that stuff. So regulators
have a role.
Regulators feel comfortable that it is done through a kind of like a regulated channel, so they'll be able to enable a lot of innovation, which is very interesting because that innovation will drive new services like the context of embedded finance. Embedded finance is just an application of banking as a service.
Right.
So it drives innovation. It drives a very, very rapid, quick to market implementation. So I don't need to build systems to actually deliver a service. I can immediately leverage someone else's assets to take things to the market. It basically provides value to the end user, to the customer, because they get now a portfolio of differentiated, very niche services. So I don't need to go to my bank to apply for a personal loan because I don't need a personal loan, especially the new generations. I just need, for example, a couple of $1,000s to actually revamp my living room. I don't need to go through a very lengthy process of applying for a personal loan. The new consumer lending thing can happen in a minute, like buy now, pay later kind of concept, right? So these are things that, so everybody becomes a winner because the fintechs can actually monetize and be able to deliver service very quickly. The end user will be able to get a portfolio of different service. Experience becomes much easier. Banks will be able to resell their assets and make money from things that it's the capex they've already invested in it. It's sitting idle, doing just servicing them, but it can service multiple customers out there. And the regulator basically is very comfortable that he's enabling these different things and being perceived as an enabler of innovation, not a blocker of innovation.
Okay. So I want to wind down with a couple of questions. One is, for your business, the business of creating these solutions for these entities, what are the biggest headwinds and what are the biggest tailwinds that you have to grapple with? Let's start with the headwinds.
Can you explain what you...
Headwinds, the things that slow you down, like high interest rates, slow economic growth. Those are probably two of them.
Yeah. So headwinds is basically really it's about talent. It's about how because we're growing so fast. It's how fast we can actually be able to acquire talent. So there's
Yeah. What's a gate on growth? A gate on growth is talent, right?
100%. So,
One of
one of them.
Okay.
Second thing is obviously we operate in different markets, and each market have a different regulatory component. So you need to be able to understand, and tailor. So it can slow down the ability for you to deliver. It can create additional overhead costs because you have to customize solutions based on the regulatory environment. The
Mm-hmm.
third slowdown or the impact for us is actually what's happening now. There's a slowdown in the VC, if you want,
Okay. That's interesting. Okay.
that has impacted. There was a lot of the customers actually who buy from us are actually fintechs or
Okay. So when startups aren't being funded, they can't afford to work with you. Okay.
exactly. So these are
Okay.
the kind of clear that thing has been slowing us down. Although
Okay. So the more fun answer is going to be the tailwinds, which is the opposite of the headwinds. What's the wind at your back? What is propelling your business
sure.
forward? Trends, whatever it is.
First of all, retailers, in the region are trying to find ways where they can differentiate themselves. So embedded finance
Hmm.
is a great way
Okay.
where,
Okay.
because they're trying to find ways where they can create a seamless experience, a consistent experience, whether it's online, offline, whether you're buying from their
Hmm.
website, from their app, or offline from their stores. How do you actually enable a great experience, and checkout and payment is a very important aspect of things. The second
Hmm.
thing is the disruption that's happening in the region when it comes to looking at digital currency. Uh, you know, whether crypto is regulated or not, we're seeing more and more that regulators are trying to find ways where they can enable things like digital currency, stablecoin, for example, which is a pegged currency to.
Okay. Do you guys have a point of view on central? I always trip over the acronym of central bank digital currency, CBDC, I guess. Do you have a point of view on that? Whether that's a positive, negative? That gets talked about a lot, I know, but
No,
I don't know if that's relevant
No, it's
here.
very relevant.
Yeah.
I think
Hmm.
a lot of the central banks in the region are looking at it, but more from a wholesale perspective. So it's kind of like between
Hmm.
nations. So, and there was
Yeah.
a pilot for a CBDC implementation between UAE and the Central Bank of UAE and Central Bank of Saudi, or
Hmm.
between banks. But not a
Right.
retail, not an end user kind of.
So it's a way of transferring large amounts of money across borders and between large
that that's
financial entities,
that's
essentially.
how they're seeing it, and they're seeing more about
Hmm.
the ability to tokenize assets or digitize assets
Yeah.
through.
That's been talked about for a long time, like real estate and other things. I don't know if that's what you're
Yeah,
talking about.
but starting with actually creating like a digital money, right? But pegged
Okay.
like USDT, for example, in the US, pegged to an
Hmm.
actual amount of money. So I can issue, for example, I don't know, 5 billion Saudi riyals, pegged to 5 billion, actual
Hmm.
5 billion Saudi riyals, and then becomes this a digital currency that I can use. And this is something that the region is experimenting with. UAE just announced legislation, a regulation around that. So we're going to see the first
Hmm.
implementation in the region, in the UAE.
Hmm.
So that's what's
Interesting.
happening when it comes to central bank digital currency.
So, what do you have a sense of? I mean, crypto regulation gets talked about a lot, I think, but do you have a sense of how what the future holds, the near term future holds with regulating
So I think
cryptocurrencies?
we're seeing more and more acceptance, and what is happening is there's some interesting. So what banks, central banks want to do is they want to see the local banks have a role in that, not only exchanges.
Hmm.
So we're seeing the rise of something called custody wallets, which is
Yeah.
basically enabling the bank to hold your crypto on your behalf. Because what happens if you lose your password? What
Okay.
happens if you lose your key? What happens if you passed away? Okay.
There was this,
Uh,
yeah. There's this famous story not too long ago about the guy who forgot his password for Bitcoin. It was like $300 million
Exactly.
or something.
But this is very important
Yeah.
because what's happening now,
Mm.
in the region, they realize very quickly that individuals are buying and investing in crypto, right? So why not
Mhm.
basically enable there's already a couple of local exchanges that are being regulated, like Bit2Oasis and even Binance is already operation out of UAE, and then there's Rain in Bahrain as well. But now they're saying, okay, why not basically give licenses to local banks so they can actually hold on behalf of the clients? This is how we can protect, because central banks all about protecting the individual, protecting the citizens, protecting the, so that's one way of actually helping. We're not we're indirectly regulating it by enabling banks actually to hold it for you, right? So and then we have visibility of who holds what, who's transacting where, and so on.
So instead of regulating, it's thinking about creating better use cases.
Exactly.
Okay. Interesting. So I'd like to end with one final question, which is, pick one trend that you think is going to be the most important over the next 6 months to a year, let's just say, drive greater adoption of your services, or just greater expansion of financial inclusion in the regions you're operating.
I mean, basically, I would say the trend of enabling acceptance of payment with different kind of technology, whether it's wallet, cards, digital currency, digital assets. But I want to add one thing that's very important. I think the thing we're looking at and we're trying to invest in is how AI becomes basically a very key enabler to the financial services.
Okay. Feel free to talk about that for a moment.
Yeah, I mean, because banks started to do that a while ago with chatbot, but obviously this is not how you should use AI. So
customer support, or more.
No, but there are a lot of interesting things that actually we believe that's going to basically transform the whole industry when it comes to personalization of the service itself. So very well. So AI will become.
Isn't it going to make everything much, much faster? Like, for example, loan application processing and
personalization, understanding better. Becoming when it comes to, you're right, loan service. How do you actually become more smarter about credit scoring, and how you look at different parameters,
make better decisions and much faster 100%. Decisions, right? Yeah. Okay. All right. You know what? That seems like a good spot to end it on. We could probably come back and talk about AI for 30 minutes, but maybe not today.
Thank you so much.
All right. Listen, thank you so much for joining us today, and really appreciate having you.
It's been a pleasure. Thank you very much for the opportunity.
The BIG5D Podcast is a production of BigFive Digital and is written, hosted, and produced by Charles Laughlin. Today's guest was Houssam Kayal of Foo, and today's sponsor was Fractional.dev. Please subscribe to this podcast wherever you get your podcasts, and please rate and review the podcast so others can find us. Thanks for listening, and see you next time.